Hi, it's State Representative Jim Walsh here in my office in Olympia during a very busy September in politics and policy here at the Capitol. I want to talk for a minute right now about tariffs, taxes, and our budgets here in Olympia. There's been a lot of discussion in the media and in the halls of the Capitol here recently about tariffs and taxes. Our governor has staked out a very strong position saying that tariffs enacted at the federal level are the biggest threat to our economic well-being here in Washington state. Others of us take a different perspective. We believe that our tax policy here in Washington, and particularly a number of state tax increases that have been passed through the legislature in the last session or two sessions, are the bigger impact, are the bigger risk to our economic success in Washington state. This discussion is an evergreen one, but right now the discussion has gotten to a fine point around a couple of reports that are due this month from a standing council here in our state government in Olympia. That council is the state's Economic and Revenue Forecast Council. It's a group of economists and a few legislators who get together, and once a quarter each year, they put forward a report. And that report takes in current economic information and current tax receipt data, that is taxes being collected by the state of Washington, and puts them into a formula, reviews them, and makes a projection, makes a prediction based on its economic models of what we should expect in tax revenues, tax receipts coming in to the state government in Olympia. This is important because the budgets that we pass at the Capitol in Olympia have to assume tax receipts coming in to pay for them. And so while we make our budgets on an every 2 years basis in Olympia, and we can modify them during the 2 years, these quarterly reports are kind of a reality check to how much money is coming into the state government in order to pay for its budgets, which of course are more like plans of how to spend money, your tax money. Well, there's been a great deal of concern because the last couple of these quarterly tax revenue forecasts from the state council have come in a little lower than was assumed when the budgets were being negotiated. That could create a projected budget deficit in the future for the state government. Well, as these recent quarterly projections have gotten a little bit lower, there's increasing pressure on the budgets because their projected ending balances at the end of the 2-year budget period begin to look like they would be negative. And in our state, by our state law, that can't happen. Our state law requires our budgets to be balanced, and that's defined primarily by having a positive ending fund balance in the budget's main funds at the end of the 2-year budget period. If the newest quarterly report from the Economic and Revenue Forecast Council comes in weaker, and that report's due this month, it is possible that the ending fund balance for the state's main operating budget will go into a negative number. And if that's the case, we have to adjust the budget, which is normally done by the governor calling a special session of the legislature. At that point, it won't really matter whether it was tariffs or tax policy that most affect our economy here in Washington, because we will be in the red. We will have a negative number on the ending fund balance, and the reasons why don't matter. The fact is the legislature will have to do something to adjust that so that the ending fund balance becomes a positive number again. That means either cutting spending in the budget or raising taxes higher. Neither is a very appealing proposition. The debate around taxes and tariffs is really just battlefield prep for a special legislative session. That's the state of play for right now. Until next time, stay strong and be well.